Hi, everybody. This is Dan Sheridan at Sheridan Risk Management, and I'm going to talk about a time fly, time butterfly, as an opportunity when VIX is at low levels. And right now we're at about 14.22 in the VIX, pretty low. And so let's start out with a iron butterfly. So you start out with a short straddle. In this case, I'm going out about 20 days or so, selling the SEP 20 straddle at the money. And you can see here, this is just a short straddle. And you can see it brings in a lot of time decay. You're selling an at the money call and put. And in this instance, I'm bringing in $135. I'm a little short deltas here. We're gonna uh, try to get this position relatively neutral, near at least one delta long or short. So as you notice, you sell an at the money call and put, and that's the foundation. And you're selling that to sell a lot of extrinsic value. You'd rather do that at a higher volatility. So what do you do in a lower volatility? Well, let's stick with this concept of an iron butterfly. So I sell the out of the money, or excuse me, I sell the at the money straddle, and then I'm going to go buy the out of the money strangle against it. And if you look in this situation, what I'm going to do is I'm going to buy the 65-30 calls. Right? That's 60 points more out of the money than what I'm selling. And I'm going to buy the 6,400 puts on the downside. I'm going to buy 70 points further out of the money. So on the call side, I'm going 60 points out of the money. Put side, I'm going 70 points out of the money. You say, Dan, why are you doing that? To get the deltas relatively closer to zero, in this case, within one. So I'm going only 60 points out of the money on the upside, 70 on the downside. Well, this is a short Vega trade. If each of my four options goes down a point in volatility, I make money, $79. Theoretically here, if they each go up a point, I lose $79. Now, generally, since it's short Vega, I'd rather do it when the volatility is a little higher. So what do you do when the volatility is at such low levels? We can keep the straddle where it is. So what do we do to an iron butterfly, which is, again, selling at the money calls and puts, and then buying some longs further out of the money. I just made my long 60 points out of the money and my put 70 points out of the money. So that's a strangle. But I did it in that configuration to get the deltas relatively close to zero. And this is a range bound trade. Now, in a low vol environment, what I'll do is I don't want to be necessarily short Vega in a low vol environment with VIX is 14. So all I do is instead of buying my strangle, right? Instead of buying my strangle, the same expiration as my shorts, I'll go out 7 days. So I'm going to buy my strangle, the same strikes, 65.30 in the calls, 6,400 in the puts, but I'm going to be buying much more extrinsic value. So it'll cost me more. Deltas will be neutral. And now you notice they're both positive theta trades, but now I'm long Vega. I benefit if volatility goes up. So this would be called a time butterfly. Now the margin, this would be the iron butterfly. The margin or capital to do this trade, it's a $1,700 trade. Whereas the time butterfly is going to be more expensive. It's going to be around $4,000. And the reason is just because you're going out and buying your longs September 19th, you're going to pay more. So again, here's an iron butterfly. Your positive theta short Vega, deltas are relatively neutral within one delta, and it's a range-bound trade called a broken wing butterfly. Now, in a low vol environment, VIX is 14. I'm just taking my longs and going out another 7 days. And so I'm converting this iron butterfly into more of a time butterfly, kind of like a diagonal type trade. My longs are further out than my shorts. A diagonal just means different expirations, different strikes. And you can see here, my longs are the same as my longs in the previous example, the iron butterfly. It's just they're further out. So when the volatility is low, I'd like to buy more extrinsic value. So something to think about. Here's something I'm looking at for this upcoming week as we're in a very low volatility environment. Thanks, everybody. Have a nice weekend. Thanks.